All right, today in this video, I want to outline 3 scalping tips or golding criteria that will help you in your trading, especially if you're a beginner and let's say you have a goal of making, let's say $500 a day. All right, this is anyone out there that understands the basic concepts when it comes to trading the future markets or any particular market. When I say this, I mean, because number one, you have to understand the basic concept of structure. You have to understand how to read the charts because everything that you need to know is basically on the charts. If you ever heard anyone tell you that, allow the trend to be your friend, or take a look at the charts, allow it to show you what the market is actually doing, if it's bullish or if it's bearish. The chart's your friend, so allow them to guide you as a pathway into looking for great and quality setups. Now, when I say that, I'm talking about supply and demand areas where the market is either pushing hard either to the upside, and you can see these big bullish runs or these big bearish runs in any particular direction. Now, one thing, you need to understand is structure, because just because the market is making a bearish run to the downside doesn't always mean that the market has, shifted in the opposite direction, because you have what's called internal and external structure. And that's one thing that I'm pointing out that a lot of traders out there really need to pay attention to. So if you're a beginner and you have a goal, let's say of making $500 a day, and you are on your path, your journey, and you're studying, you're doing your research about what market structure consists of, please do your homework to master that concept, because it's extremely important that you do so. If not, you're going to fail when I say that, because so many people, they tend to turn to indicators to give them a sense of direction on how to trade. Now, the number one thing, again, that you need to understand is structure the market. You have to understand the flow, and this is on a 120 range chart. It doesn't matter if you trade time charts, guys. Whatever you use as a higher base chart, whether maybe it's a 60-minute chart or 4-hour chart. What I'm trying to tell you is that allow that to be your basis of which way you decide, or in looking at which way to trade, because that's where you're going to, once you determine the picture, the overall outlook of the market, then you're going to mark up your charts, correct? And then you're going to move down to a lower base chart to start to find setups. To me, when I look at a market like this is going back to the latter part of pretty much of July. I see just bullish sentiment or direction to the upside until it reached this point right here, to where we got a reversal pretty much after the market came down and it took out this low right here. Okay, this is a major point of reversal within the market, to where the market starts to make lower lows and lower highs. It takes out, a lot of you may call this a change of character. It takes out these lows right here, and then the market starts making what? Lows, lower highs, and starts to push lower until we reach this point right here, and then it starts pushing back to the upside. So you have to be able to understand at which points the market is pivoting from bullish to bearish, bearish to bullish. That is the number one thing when it comes to structure, and that's why I did such a great video covering that. At least I think so. And I put it, it's private, but I made it part of the elite and the ultra elite membership. And to all those that are part of that program or part of that membership program, I thank you for supporting the efforts of not only the channel, but me as a trader and a content creator, and providing you with relevant information that has helped you time and time and again. That video content, so much video content, is there in a private community for anyone that wants access to it as well. It's very inexpensive. I'll talk about it towards the end of the video. But let's go ahead and talk more about these 3 golden criteria tips when it comes to this scalping strategy in which I trade each and every day using the range charts. First, to pick the market direction. Are we up or are we moving down? In this case here, we're pushing to the upside, so I'll be looking just for pullbacks to go short. Reversal situations are going to be where you have the market coming down, and it's basically, like a lot of you probably understand and know, is breaking below what's called a change of character. It's where we're breaking below an external major swing. Okay, it could be a swing high or swing low. This is a major swing low right here. So when the market came down there and broke that area there, that is a reversal sign to me, because we got the first low below this low here, and then a pullback making a lower high, and then coming down and making a lower low. That is a reversal. Okay, especially when the market takes out. Now you can have what's called an internal change of character versus an external. Externals are going to, which is our major structural points, are going to hold and carry more weight, especially when the market breaks through those, in this case here, coming to the downside and breaking that external or major area structure right here, this low. When it does that, that's a full-on reversal in the market. And internal is going to be just the market, you can see where the market's making highs, higher lows, and breaking to the upside, breaking structure here, highs, higher lows, breaking structure right here. Okay, these little small points right here, these would be the small structural breaks right here to the upside, will be internal change of characters or internal structural points, these lows right here, if the market breaks through them. Doesn't mean that the market is totally reversing to the downside, but this could be just for a short period of time and then it pushes back to the upside right there. A lot of people get caught up there because they don't classify, don't quite understand, and don't really know how to define, what's classified as a major or external structure point versus an internal one. Internals, again, are just going to be quick push up, quick push down, and the break structure. Just basically a nice swing. But when you have major swings like right here where the market came down, it broke below an internal structure point there, and then it made a low, lower high, and then it broke more structure coming down. Now this is setting it up for a major structure point right here to where if it breaks back to the upside, this would be considered an external or major structure high that where the market's breaking to the upside. I talked about that in videos before about waiting for the market to break and take out major areas of structure. This is the major area structure. This low point right here is a major area structure. It broke that area. Okay. So when I see things like that, we got the reversal. So we're looking for areas first and foremost when we're trading. Number one, again, is the market bullish to the upside, making higher highs and higher lows? If so, then we're only looking for pullbacks to key areas of demand. So you say, okay, well, if the market starts to reverse and starts to break structure lower, yes, we should start doing what? Looking for opportunities to go or take short entries at supply areas of supply, which are aggressive areas of supply. If you don't know about supply and demand, understanding what's the difference between supply and demand, then you really need to do your homework to understand, basically demand is aggressive buying where the market has got, let's say it's pushing hard to the upside and you have multiple green candles, that's demand. Vice versa, supply moving to the downside with lots of red candles, okay? So in this case here, when we took out this low right here, made a low, lower high, broke lower here. Yeah, it's coming down and it's taking out some internal areas of structure. And yes, this pullback right here would be, well, this is off of a higher base chart. So let's look at this one right here. When it broke this major low right here, okay, this is a major external structure point right here. It pulls back. You see that little blue rectangle right there, okay, and that outline magenta one is from a higher chart, a 240 range chart, but this is a major area of supply right here, okay, or I should say this is a supply zone. This is a major structure point being broken, break structure, comes back, that is an area of supply resting right there. You can look to take trades going short now because the market reversed where it broke it through a major area structure. So that's leading into kind of like number two. Once you've identified the direction of the market, let's say it starts to break structure lower, then and you have this area of supply right here, then you're looking for an opportunity to go short because now the market has taken out a major low, an external structure point, making a low, coming out, making low, lower high, low. Now we got a new low being broken below this low here, and now you have this not external, but you have this supply zone right here, okay, leading me up into number two. So number two, which is part of the golden, criteria or tips when it comes to using a great scalping strategy like I use in my videos and I talk about in my own personal trading each and every day, is this aggressive selling point right here. You see where there is a imbalance resting back on this candle right here, okay? See how the market made a low, lower high, and came down to the downside? So you have one bearish candle, two bearish candle, three bearish candle. On that the second candle right here broke below that last bullish up candle, right? This one right here, it broke below it, it closed below the body and to include the wick of that candle right there. That third candle, it didn't come back and fill the gap on this candle here. So if we draw up our supply zone correctly, then we have an imbalance or gap resting back at this zone here. The market comes back to the zone there. There's an imbalance resting right there. That's criteria number two. You must have a gap or imbalance resting back at the actual supply or demand zone. In this case here, a supply zone. So when you see things like that, where the market's taking out a major area structure and then it's breaking lower, and then we get a pullback to a newly formed supply area, that's going to be especially when you have that imbalance or gap at, that's where you're going to have nice quality setups like that happening. So then the market does what? Comes down, takes this low out after pulling back to supply, comes down, takes a low out. Then you got another creation or a newly formed supply zone right here. We're moving to the downside now, right here. Okay, small gap attached to it or imbalance right there on that second candle right there. When it pulls back to it, what does it do? It pushes lower from there. So that's a supply zone. We're running lower, low, lower highs up in this area here, making new lows, okay, right there, pulling back to another supply zone there, and then it runs to the downside from there. Let's see if we get another one here. A new low, lower high, pulling back, okay, supply zone. It wicked above these highs, well, no, and actually it went right above this area here where the supply area is, but that's a low probability supply area there. Let me show you the difference between a low probability right here. These are the type of setups that I really don't take trades on. Okay, so let's see. It actually broke below there. No, that's not a low probability. Let's see if we can find a low probability, because I want to show you guys the difference between low probability and high probability. This one here was actually high probability on this right here when it came back. So the market made a low, lower highs, came down, broke structure here, pulled back. That's high probability because we got a gap attached to it. This one's got a gap on that candle there. This one's got a gap on that candle there. Let's find a low probability supply area, just showing you. See how this candle made a low, lower high, and it came down and broke structure coming lower? Well, that second candle, when it came down and broke below the body of, and to include the wick of that last up candle there, this candle here, it came back to it right there, okay? That third candle. So the second one came down, broke below it. The third one came back and then filled back up to that bottom end of the last bullish up candle right there. So it didn't leave a gap once it broke away from that. So typically, if this candle came down and this third candle here just kept pushing down to the downside without pulling back right there, then you have a imbalance or gap resting right there. Same thing like right here. Came down, low, lower, high, broke, an area structure coming below this area, this low right here, okay? But this candle here, the second one, when it closed below, the wick of that second one came back and it filled. I'm sorry, when that second one broke below, the wick of this third one came back and it filled back up to the bottom end of that that bullish candle right there. So there's no, when it comes back to this area right here, when it pushed down and comes back, there's no imbalance resting right there. So that's what's considered to be a low probability supply area. So again, number one, that golden criteria we must have, or that tip, number one, we must have where we're understanding structure, moving in the direction with the overall market. Two, we have to have, a gap resting back or imbalance resting back at our zone. And number three, what I'm looking for is going to be, do we have a breaker structure? Okay. There's a difference between just having a supply or demand zone. You can have that where there's no swing, attached to the demand or supply zone, meaning that there's no breaker structure. And to me, I like to have a breaker structure versus one where there's not. I'm not saying that those zones that just have a demand or supply setup may not hold, because they will, sometimes, and then sometimes they won't. But when you write down your criteria and you're making that part of your trading plan, for me, understanding structure, which way are we moving in? Let me follow that structure, okay? And then number two, there must be an imbalance. If I'm going to size up the market and start marking up my zones, I got to have an imbalance or gap attached to the actual zone. And it must have a breaker structure on it. That's the third thing. Okay. So, if we take a look here, like these were breaker structures coming to the downside, push down, pull back, broke structure. This is a swing right here where there's a breaker structure with a supply zone. Same thing right here, push down, pull back, broke structure. Below these lows right here, that's a supply zone right there, and it has an imbalance or gap to it. Okay, so you may be saying, okay, so what do you mean? Can you show me an example of like demand, right? All right, let's take a look here at demand. When the market comes down here, okay, we made a low, lower high, it comes down, makes a new low right here. This area right here, this will be a major structure point or an external area structure, not just an internal, but when the market makes a high, higher lows coming to the downside and then breaking structure above and taking out that major structure point. Look, this is a breaker structure above these highs. It took out some major highs there, okay, or this external structure high right there. And it pulls back. This is a demand area right here, okay? And there's a small imbalance or gap resting back to this actual demand area, that broke structure right here. So when it pulls back, I'll be interested in going long. Then we move higher, okay? And the market's coming up to fill imbalances back up to the upside. And as it's moving higher here, you can see it's taking out more structure right here to the left-hand side, okay? So this point right here, we got a low. Let's see, we got a high, higher low, breaking structure, reversing back to the upside now, okay? And then the market starts to take out more structure as it's moving higher. And this is a demand area, okay? Now, this demand area right here, there is no breaker structure in a sense attached to it. This is just a demand area that broke more structure to the left-hand side, but this is a demand zone right here, all right? Demand zone without a breaker structure, but we did break structure to the left. So it pushes up, makes high, higher, low. We come back down, we tap this demand area right here, aggressive buying, you can see there. It held up, you see that? And we have an imbalance or gap resting back at the actual demand zone, okay? So we had one here that we can mark up. I'll mark both of them up for you so you can see. This one here, again, broke structure here. This is just a demand zone. This one's a demand zone right here, just as well. But they don't have a breaker structure attached to them on this remaining, where there's a swing right here with the breaker structure, but it did break this area structure here. This one here, small demand area here, but it did break this area structure right here. So again, we want to see where some structure is being taken out. We want to have an imbalance or gap resting back at the zone, and it must be moving in the direction. If I'm interested in going long, I must see where there's like an external or major area structure being taken out. It did right here. Broke structure, took out that area right there, moving higher, broke more structure. That's telling me the market is bullish and wants to move to the upside when it's taking out, multiple areas of structure to the upside, especially if it's taking out a major area structure. So again, to cover those three things, understanding, getting the structure or the movement of the market or the structure correct when you're looking, looking at what direction to actually trade, either going to the upside or going to the downside, taking plays off supply or demand. 2, you got to have the imbalance or gap resting back at the zone, and there must be where the market is breaking structure, either in the form of a swing up to the upside or downside, or where it's taking out some area of structure to the left and or right side of the chart when it's moving, to the upside. Okay, so those are the things that I look for when I'm actually trading, and this is what you as a beginner, as someone that's interested again in trying to make a minimum of $500 a day. I'm not saying quote unquote that you have to do that. Some people $250 a day is just great for them, but as a beginner trader, you must understand one thing: it's all about compounding and growing your account. Please, separate yourself from the money portion of it at the beginning, or at any time, to be honest with you, because when you're trading, you should be looking more so and thinking more so and geared in your mind and looking for quality setups and not thinking about the aspect of it when it comes to the money. Because a lot of people, what happens is they'll trade and they'll stay in a trade longer than they should be, and they'll be trying to ride it, and then it's like they're up, and next thing you know, they allowed the market to come back against them, and it's like those are the tough periods as a trader to where you say, I made a major mistake. I was up, I allowed greed to take control of my psyche and my trading, and that's where people fail at, okay? But anyways, I just want to share that with you guys. Now let's get over and talk about, for all those that want to become an elite or an ultra elite member, very inexpensive. What you receive in becoming an elite member at the private community are all my trade breakdown videos, which are tons of them, where I go over setup after setup. These are trades that I've taken, posted over on our Discord channel. For anyone that's interested in joining the Discord, the link is down in the description portion of the video. It is free to join. Come over and join us over on the trading floor on the Discord. Right below that is another link. It's titled Ultra Elite Members or Supporters. If you click on that there, give it a couple seconds, 3 tiers will pop up. Make sure if you're interested to choose either the elite or the ultra elite. The elite, you receive the trade breakdown videos, the video playlist, and a great video that I covered surrounding market structure for anyone that's interested. If you want to become an ultra elite, you receive everything that I just discussed, plus my live recorded trading sessions and market recap videos. So you receive all that to become an ultra elite. So the choice is yours, but there's loads and loads of valuable content that it should help you out in your own personal trading. Can't guarantee anything to everyone, because everyone reads and sees the market differently, but I try my best to break things down in regards to the trades that I actually take. So, because that's one of the biggest things that has helped so many people out is, okay, discuss your trades, break them down. We like to see what you're talking about. It gets you into the mindset and the mode of understanding what I'm thinking, why I'm thinking that, why I took those trades, where to place your stop loss, where to place your profit target, why I took the trade, because of structure. Okay. But outside of that, guys, that's all I have. I appreciate everyone, spending time and watching the video content, and hopefully it's been very beneficial and educational at the same time for you. But if you're doing the biggest favor right now, if you haven't already subscribed to the channel, click the sub button down below. Make sure to turn your post notifications on. And before you leave and click the X button, make sure to drop me a like on the video. I appreciate it. I'll see everyone in the next one. Take care.